I'm Aoifinn Devitt, CIO at Moneta, and welcome to this Moneta Moment where we speak about whether a portfolio can ever really be inflation resilient. Inflation is certainly the topic du jour. It is on everyone's lips, and the question is it transitory as the US Federal Reserve would have us think, or is it likely to be with us for the long haul? Let's take a look at this graph, which shows that inflation is by no means uniform. We can see that across the period from the beginning of the pandemic, transportation has exceeded all other baskets in terms of how quickly that has risen. Headline CPI rose by 0.9% in June for a 5.4% year-on-year gain. It's notable, however, that this comparison is to a very low base back in 2020, so the base effect is still observable but is beginning to fade. If we look across this graph, we can see that not all inflation is equal. Clearly, oil and gasoline are showing the highest price rises. We've also seen rises in lumber as well as copper. On the other hand, gold has actually fallen in price over the 1 year. High levels of inflation is bad news for yields, and real yields have been trending lower as yields themselves compress and inflation ticks upwards. So what are our Moneta Moment takeaways when it comes to a rising inflationary environment and what this means for negative yields and what you should be holding across your portfolio? First, TIPS pricing currently still locks in a negative real yield as inflation expectations have expanded more than real rates have risen. So, if explicit inflation hedges like TIPS are challenging in terms of return, what else can protect against inflation? Within a portfolio, real estate, real assets, especially those that are linked to commodities prices, equities in the long term, not in the short term, and bond ladders can also help with inflation. When bonds mature, they are reinvested with new inflation assumptions built into current yields. So overall, it's important to stay balanced and diversified across a portfolio. Most components of a portfolio, such as core equity and bond allocations, will, over the long term, tick upwards and keep pace with inflation. Neither of these categories can be expected to perform well in the case of an inflation shock, which is why building in inflation-resistant elements such as real estate and real assets across a portfolio can ensure that your portfolio is more inflation resilient. I'm Aoifinn Devitt, and thank you for listening to this Moneta Moment.